Check. Good morning, guys. First nooner event here. Covering 2024 topics. We learned from the past data in future TV lives to be really clear for us. Share this around with your friends. We're going to be doing this every single day. New updates coming. All right. Check. Okay. Good morning, guys. It's been a couple weeks since we've done anything on live stream. So we're going to take it a little bit easy. We're going to start the year off a little bit smooth. And we're just going to try to look at some of the past data, some of the things that we could have learned from larger economic events such as Trump being in power or soon to be in power, some of the possible recession possibilities, the altcoin market really booming off. And we're going to take it slowly here, guys, because it is an hour-long stream. So share this around with your friends. We are doing something new, however. This is going to be an everyday stream, first of all, and every single day it's going to be a different topic. So you're going to get a little bit of education, as well as we're going to do a market breakdown, and we're going to be answering questions. That being said, what I want to do is I want to promote this education to the mass. I want to be learning here, guys. So I'm going to be offering an incentive program. It's going to be a sort of a fan-based incentive program where you can take clips of all of these streams. You can take clips of my personal TikToks or X account or Maven's personal, not personal, but Maven's videos that we're posting. And I want you guys to be reposting this stuff because we're going to be doing giveaways. I want you guys to be teaching your audiences the things that I'm teaching you or that Maven's teaching you. And then we can spread this information even further and we can really help out more people. Are we getting video lag? What's lagging here? That would be uncomfortable if the very first stream is lagging again. Give me 1 second. Check. Is it fine? Just like Top Step's doing with their social media. I'm not sure what Top Step is doing. Top Step is a perfectly fine company. Maven is a perfectly fine company as well. What I'm going to be doing is I'm going to be teaching you guys. And why don't we start that then, hey? No lagging? Okay, lagging for a little bit at the start. Okay. Great stuff, guys. I've currently got the bond yields on stream, but I think let's look at the market breakdown just for today because it's looking really, really great. Okay, cool. It's looking really great for the market open here. I was able to lock in about $1,000 profit on my personal trading accounts, which is lovely on the open. And let's just look at why I was able to do that. I personally trade the NASDAQ. Let's look at the NASDAQ. Coming into the weekly open, we generally don't want to be day trading with the weekly candles. If we are day trading, we can only basically look at the daily candles or less. Personally, I don't look at the daily candles really, but we did actually gain this level once again. Sorry, let's draw a nicer circle here. It's been a while since I've drawn on a chart. This candle here, we've actually regained this zone. So it looks like we're going to be actually testing that level again. So it does look like we're going to be going up a bit higher. 4-hour candles, just clean closes all along. And when I was waking up this morning, you can see really clean closes. There's no reason for us to be going down here. We're going to be targeting those highs once again. So we took a long on the open. We were successful with that long. Look at the other markets. We can see Bitcoin, same sort of jazz. Really clean, solid opens coming into the new year, I suppose. This is the first week of real volume, I suppose. And this is where you're going to want to be full-time trading once again. The past couple of weeks were a little bit iffy. I took a week off. It was terrible, guys. I don't like taking time off. I don't know about you. Coming into Bitcoin, we can see that the weeklies were actually closing in quite poorly. So I am no longer confident in this bull market cycle. After having those weekly closes below that area, I'm looking for a rejection off of here. I think there's a possibility that this was the midterm high or a full cycle high. We're going to discuss the market cycles in a second here after we do a little bit more breakdown. But this is telling me that we're possibly looking at a trend all the way back down here to this gap that we had seen when we first got Trump elected. Let's look at, see if I can get a different chart here. This gap right here. So this was the gap right after Trump got in power, or I guess he's not quite in power, but the actual election date there. And it really gapped up. So that's the area that I want to look that we could be retracing back to after we got these candle body closes to the downside. Now on the monthly candle, we did have a monthly that also looks kind of not so great after we are in a bull market. We don't like having those really, really bearish monthly candles. So again, it looks like downside is a potential for Bitcoin. If you guys got any questions along the way, post them in the YouTube chat there. I'll be reading them along. Excuse me. Let's look at some other markets here. In Bitcoin, first quarter going to be consolidating, second quarter 125K. It's perfectly possible. Guys, the potential for Bitcoin to go up or down here It's not, excuse me. It's not, there's not much more to the market cycle. And I'll have to be honest with you guys on that. It does look like the market cycle is kind of ending in terms of the potential for more growth. Okay. So we could say maybe the absolute top might be right around here, right? Maybe 170-ish, right? There's not a whole lot more going on into that, the possibility of what you could win. So you're basically looking for a trade. If you're entering into the market now, you're basically looking at this as a trade with a possibility that you could get up to, 150 or so. But the reality is you could lose everything, right? So it's a really terrible trade opportunity. You probably want to be looking at better options. Voice distortion. Is there an issue with my voice? Maybe I've got the settings wrong here. Clear now. Okay. Cool. I'm looking at gold. We might as well look at gold now that we're in the new year here too. Let's delete all these. We can see the monthly candles on gold looking okay. There's nothing too significant on here. There is a bit of a pullback. Weekly candles are getting us more information. We are closing the past couple weeks a little bit torn, actually. I wouldn't be making any major decisions on gold or personally on either side, because we are just getting wicks on either side here and here of either side of this range. So we're going to need to wait until it breaks out with significance to other side, and then we can take a trade off of that or take a trade off of that. A little bit uncertainty on the gold market there, which makes perfect sense as we were just kind of over the holidays and we want to take a bit of a break. We're waiting for the actual price action to be making more sense to us. It does look like the traditional markets and the crypto markets are doing super well, though. Let's look at the S&P once again. And the S&P absolutely destroying these levels back here that were previous support. They got bought up super easily. So it does look like the market is going to be continuing to the upside for a little bit more over the next couple weeks, supposedly. And I'm going to be a little bit scared on the Bitcoin side of things just because of those weekly candles closing bearishly. I think Bitcoin might be the more risky play versus traditional markets currently. If we go to crypto side of things, guys, I want to look at, what do I want to look at? I think I have it here actually. Totals 3. This is a really important indicator or ticker rather that you guys can use to help you judge where we are in the market cycles, right? So if we wanted to dive into the market cycles, we might as well do it now, actually. We have Totals 3 minus USDT over Bitcoin. So what that means is Totals 3 is the ticker for all of the pairs, all of the crypto pairs, except for the top 3. So Bitcoin, Ethereum, and whatever the third one is. And we're also excluding the US dollar fiat coin, right? What's it called here? The stable coin. And then we're going to compare that to Bitcoin. Now, what that tells us is basically the dominance of the altcoin market, right? There's another option you guys can do is you can do others, which is the top 10 that's excluded. So this is the top 3 that's excluded. Others is the top 10. Okay. So when we look at this chart, we can look back in history and we can see that every single time this chart starts to surge, that's the end of the bull market. Okay. The 2017, that's when all the altcoins went nuts. And once again, in 2021, all the altcoins went nuts. And then the end of the bull market was right after that. It does look like we've actually just broken out on this past couple months here, and we've retested that level. Okay. So it does look like we're going to start surging here. Generally, you have 1, 2, 3 months afterwards until you're at your peak. This one is 1, 2, about 3 months. We might have about 4 months afterwards. So this is about 1, 2, 3. We're in the third month now. So we might see a couple more months here for this to fly up. And then we're going to gain some really great dominance in the altcoins while Bitcoin might kind of sit still for a while. Please don't spam the chat with garbage. How do I mute people? I'm not sure how. There you go. Timeout. Perfect. Cool. Guys, if you guys have any actual questions, post them in the chat. I'll be following along slowly. This is a bit of a longer stream than we are used to doing on this Spaces. So we're just going to kind of take our time, answer questions along the way, help you guys if you have any questions. Okay. It's going to be alt season soon. Yeah. So totally. I think so as well. I think alt season's kind of coming, which means the rest of what we're going to look at here today, which is a little bit of the fundamentals of the market, quite important, and then might be overlapping really well, actually. So there's actually a point here I wanted to look at. If we go back to Bitcoin, there's some things that we can actually look at that you guys might have useful in your artillery box here. And when we look at, let's get an actual decent chart here, okay? And let's make it a little bit easier. When we look at all of this from March 2024, basically 2024, we were just kind of ranging. And can I make, there we go. I want my face a little bit bigger here. There we go. 2024, we were basically ranging for the whole year. Now, how did we know that this was going to be flying up? Well, right around October, September, we can see that price started pushing up. And you can see, if you look at the inflow of the ETFs, you can see confirmation on that chart here that we were actually going to be breaking out. So in, let's overlap in there. Let's zoom in. So you can see that we're actually getting strong confirmation on the inflow. So you guys might want to be watching this sort of stuff when you are making sure that people are actually buying the dominance into Bitcoin. They're actually trusting Bitcoin. You can see the ETFs are a very strong measure of whether or not people are actually confident in the market or not. So I'm just trying to hover over the dates here so you can kind of see that's end of October-ish. And then you can look back into this guy. And you can see kind of November is when we broke out, right? So we could see that in October, we were seeing price flow into the ETFs. And then November is when the price actually broke out. So it was a little bit of an iffy thing here that I was actually personally struggling with as well, because I wasn't sure where it was going to go. I was expecting it to continue to range, but the reality is when we're looking at the ETF inflow, we can see that, okay, this is going up. This is no problem. They don't mind buying more and keep holding more into the ETFs. Now, if we look into what's currently happening, we can see that it is once again ranging. There's a position here that altcoins could be flying up because it doesn't look like there's a whole lot of confidence going into Bitcoin because it is ranging. It's going to stay stable for a while. People are going to wait and they're going to remeasure their allocation to crypto and other assets. Let's look at the, I've got something there that's a bit messy. Let's look at the FOMC data over 2024. So over 2024, let's zoom that in. We saw that the FOMC, the Fed, started cutting rates. Now, what does the cutting rates mean for the U.S. economy? This is specific to the U.S. economy. It's different for other economies, but generally the U.S. economy kind of leads the global push, right? And they start cutting rates, and it's not super, super fast. When it's super fast, that's cause for concern. When we look at the Canadian economy, they cut rates so incredibly fast that it's actually causing even bigger problems in Canada. U.S. economy is not as significant. So this is actually good for the economy. The lower the rates increases more loaning power, more spending power, more people taking loans and then spending them on investments and whatnot. So that's been a good cause for checking to see if we want to actually be investing in riskier assets. If the rates are low, people are going to be having more money to spend, which means they have more money to put into the investments, which means the economy does well generally. Okay. If you cut rates really, really fast, that's a little bit of cause for concern, just like Canadian Fed is causing right now. They're causing bigger problems. Another thing to take note of here is I have the bond yield curve here. And if we type in the bond yield curve, it's US 10-year over US 2-year. Okay. This is something that you guys might not be familiar with. But generally, you can kind of follow this and see how recessions and bubbles get formed if you're looking at the difference between the treasury bond yield for 10-year and 2-year. Okay. So this is the higher this number means the better return for the 10-year bonds with respect to the 2-year bonds. So the longer investments are better for the economy in the long term, right? So when this crashes to below 1, which it was before, right? It was below 1. That means that the 2-year bonds are actually performing better than the 10-year bonds, which sounds very weird, okay? Very good. So when we look at these guys, we can see that we've actually, in 2024, we actually started curving back up, which means that the 10-year bonds are starting to do better, which is good for the economy in the long term. Now, the trick with this one is it is actually a signal for a lot of recessions. When you start curving back up, there's about a 12-month usually gap between a massive pullback in the stock market and a recession. Let's look at some past data, for example. We can look at the low of 2019, July 2019, and then we can look at the actual chart for the S&P and the NASDAQ or something. So July 2019, and then about 12 months later, so let's say July 2020, let's go to the NASDAQ real quick. What happened in right around there, right? So July-ish 2019, June, July-ish 2019, we had a run up and then there's a massive crash back down. And this doesn't need to be too significant, okay? I wonder if we can go back here. 10, shoot. I got to save it. Over US 2-year. Okay. And let's look at another one when it starts curving back up. Okay. And so they could be significant though, however. So right around the bottom, when it started curving back up, you got about April of 07. Let's jump back to the NASDAQ. And April of 07, about 12 months later, you have this massive crash. Okay. So it's very risky about 12 months after you start curving back up. So let's jump back once again to look at the 10 US 10 year over US 02 year. Okay. And you can see that that actually ran up and it ended up being good for the economy in the long run, but it does cause a crash generally a little bit after. So we have one more. I'll just show you guys really quickly. The 2001 crash, right? When that started coming back up in 2000, then we saw another giant crash in 2001. That's you guys should be familiar with that one as well. One thing I want to ask is what changes come in the last month of the year and first year of the year? I'm not sure what you mean by that. When are we getting more podcasts? You're currently in a podcast. I'm not sure. This is the new podcast format from now on. It's going to be a daily podcast. If you guys want to take clips of these education series and then repost them, we're going to be doing giveaways. You're going to have to repost them in the Discord. So you're going to have to look in the Discord in the comment section below. There's a Discord link, and then there's an area in the Discord that you can post your content. And I'm going to be going through there and churning and just giving people 50K accounts. Okay. Cool. So we started curving back up now, guys. We can be pretty sure that we are curving back up right around this point. So about 12 months after, I would say about June of 2024, it looks like coming into this year, there could be a possible recession. And that doesn't mean that we're not gonna blow up now, right? There's a lot of indicators telling us that the altcoin season is super strong. Trump being elected, super strong for crypto, one, and super strong for the U.S. economy, for one. But coming 6 months from now, it looks like we could be seeing a recession just based off of that bond yield curve shifting. Okay, that's a really strong indicator, and it's generally always right. We also have the spending power going up because of the rate going down, right? Which is good for the economy, which could create a bubble. And then the other note that we want to take note of is the CPI has been going up over the past year. So in 2024, we've seen the CPI generally increase. Now, guys, I know it says it is pretty much normal rates, but they changed the meaning of what the CPI is because the consumer price index is based off of what people might generally be buying at the grocery store. And they pick and choose different things people might be buying. Okay. So it might include the price of a loaf of bread, might include some bleach or milk or eggs or whatever it is, and they pick and choose what that is each year, and they've changed what it is. So if you actually go into the inflation rates, our inflation rate is much higher than the expected 2 to 3% that they're kind of stating here. It's not quite right, and I think this is a little bit tricky in. They're kind of tricking consumers into believing that the inflation rate is normal when we know for sure the inflation rate has absolutely exploded. So this is a little bit deceiving to the markets. Okay, so what deeply difference between U.S. and Trump and its affecting theme in the Bitcoin and stocks? Yeah, so Trump being elected, it caused really, really good moves for Bitcoin because he is pro Bitcoin. The ETF inflow was also positive during that time, so there was no reason for it to be against Bitcoin. So when he did get elected, it did cause a massive spike in price. Now we have hit that 100K number. We have seen some sort of rebound back to the downside. Let's jump on Bitcoin. And pressure into the downside. Now, we would be looking to buy up any of these sells. This is a very good buy in this area. Now, guys, in a bull market, you generally want to be buying 20 to 30% dips, okay? If you go back through history, and I'm sure you can go back through history, and maybe we're going to do it right now just for funds, 20 to 30% dips are quite common, actually. So this dip here is actually quite pathetic. 15% is not that big of a deal. Here, we were in a bull market still. That was a 30% dip, okay? So, guys, let's look at the market cycles. Just making sure I covered everything that I wanted to cover for. Yeah, so the other thing is non-farm payrolls. They've been perfectly flat. That's perfectly good for the economy. Nothing's too crazy for unemployment or anything like that in the U.S. economy. In Canada, however, it's getting bad. With the 25% tariff that Trump is potentially offering to Mexico and Canada, is going to cause prices of electronic goods to go up in Canada, in the U.S. actually. It's going to cause prices to go up, and it's going to cause inflation to be even higher in the U.S. actually, which could cause even more reason why we could be going into a recession halfway into the year. It is going to cause a huge problem for Canadians, but Canadians are not really a huge issue for the global economy. Generally, Canada is not too considered to be important. And I think that's all we wanted to talk about here for, yeah. Get rid of those. Bring this one back up. No, it's this one. That's what I want. We're going to talk about the market cycles now. Do you believe a country's economy can give you trading edge, or is it market sentiment more important to you? So the country's economy is a massive importance, actually, for having a trading edge. One thing alone, I'm going to show you something. I'm just going to go CAD USD. Okay? And if you've been following what's been going on in the Canadian economy, you made crazy amounts of money because it is so obvious. Now, this is why we're talking about a little bit fundamentals on Mondays. Mondays is a little bit more of a fundamental thing. Tuesday is going to be our technical analysis, our actual chart patterns and whatnot. And if you've been following the Canadian economy, you know it's terrible, right? So all you had to do was a year ago, just sit blindly in a short. You didn't have to look at the chart at all. And you would have made crazy amounts of money off of this, right? At the start of the year, that's a 9% drop nearly, unleveraged, right? You could have very easily double, tripled your money, you know, on a short there sitting over a year, which is an insane amount of growth for a year-long investment, right? Fundamental trading is so much more accurate than technical analysis. And that's the importance that we might want to give to you guys in some of these streams is when I'm interviewing a lot of the successful traders at Maven, most of them have some sort of fundamental bias that they're following as well as their technical bias. So they're using actually both. And why is this jumping down? Well, you can easily look. Let's look at the Canadian. filter here. Let's look at just the Canadian ones, okay? I'm going to show you all of December, I think. Can I do all of December? Unemployment rate. So you can see unemployment rate in Canada skyrocketing, okay? We can look at the rate. This is the basically the equivalent to the Fed, the Bank of Canada rate. You can look at 2024, right? And this compared to the US has been dumping super fast. They've been cutting their rates super, super fast. And it's more of a trying to fix a problem rather than how the Fed is operating. The Fed is operating on a slow, confident basis that they're going to be able to lower rates over time and increase the economy, where the Canadian government is dropping the rates due to issues that are already based in the economy, such as massive inflation. And you can look at other things as well, you know, if you wanted to go deeper into it. But those are the big ones that you really want to look at. And just based off of those two metrics, right? And you can also look into the Canadian economy and saying, like, you know, who's the prime minister and how are they dealing with things? How is the taxes going into? Being a Canadian myself, I follow those things much more closely than other people. So it's very obvious to me what's happening. And all of these issues, you can see that it makes a lot of sense why the Canadian dollar would be falling compared to the US dollar. CAD is melting yet. For CAD USD, do you track Canada, the country's debt levels and credit ratings when assessing the strength of its currency or stock market? How do you apply this information? Sure. There's a lot of metrics you guys could use, and I'm not a macroeconomic major. This is not what I specialize in. I specialize in trading the markets based off of the data that's on the chart personally. So fundamentals are not as significant for me, but these are things that you should be looking at, right? If you understand them. So there's a lot of information that we can learn. And if you guys want to learn this stuff, we can do educational series on everything. So I want you guys to actually request this stuff within the Discord. I'm going to set up some sort of area where you can actually request topics to learn because there's a lot of things that I want to learn as well. And then to be able to replicate and teach that to you guys would be really great. So country debt is a huge one, of course. I know our current prime minister caused an insane amount of debt, and that's just not good for investor confidence. And generally, what you want to be looking at when coming into the fundamentals of a country is basically how is their debt, first of all. How are their citizens able to survive, right? Is their taxes going up? Is their consumer pricing going up? Is their inflation going up, basically, right? Are they able to afford to live? Okay. The next thing is imports and exports. How are they trading with other countries? So that's really going to give you an idea of how they are, their strength on a global scale, on the global economy scale. When a country's inflation rate is rising, but economic growth is slowing, how do you interpret this stagflation scenario in terms of trading opportunities? The CAD is falling. Can we relate to this? The country's inflation rate is rising, but economic growth. I'm not sure how to answer that question today, actually. Sorry. I don't have a proper answer for you. Right. I wanted to look at crypto. I have a little bit stronger knowledge on crypto that I could really teach you guys here, just because global economies are not my specialty as much. But crypto really is. I've been in crypto for 11 years, guys. I've been watching the market cycles come in and out for the past decade plus, and it's been a beautiful journey. So hopefully I can teach you guys something on crypto side of things here, because that's where all the money really seems to be going. Guys, every 4 years, what happens is we have a market top and then a correction, and it's been boring for a while, and then we wait around. So let's look at what happens here. So how do we determine the top, first of all? Right? Maybe we want to determine the top. It's usually, now I don't have the halvening up on the chart here. Maybe I should pull up the halvening. Let's see one where we can see the history. Okay, I just want to see which dates they were. Be reminded which date they were. There we go. This looks like it might be it. So maybe we have to zoom in on that. But we have the halvening in 2013, just before the 2013. So let's pull that up here. And what happens in the halvening is when the mining pool that you can get, actually this is way before 2013, the mining pool, it's halved. So whenever you get a Bitcoin reward, the actual reward is halved from before, right? So let's pull this here actually, and we have mid 2016. Okay, let's look at that one. Mid 2016, right here is it starts to pool up before a parabolic move. Okay, let's go to the next one. We have early-ish 2020. Okay, early-ish 2020. Okay. Early-ish 2020, there was a massive crash, pool up, and then so this was a kind of a black swan event, just so you guys know. But it started to pool up, and then boom, exploded. So how much after the halvening did it explode? So mid 2016, we exploded. I would say a year later. Okay, early. We'd say about a year later again, right? Again, 12 months. It always seems to be that 12-month mark. And let's look at this other one here. 2024 now, guys. What was it? Mid 2024? It was recent, right? It was right around here, okay? So a year later is probably when we're going to be exploding. So it does look like, once again, everything seems to be lining up. The potential that this is the midway point in the next bull top, right? So we could see a top up here. We could consolidate. We could come down. We could shoot up. Whatever. It doesn't really matter. Everything that we've been looking at here today is telling us that we're getting a lot more spending power because of the rates going down, right? And the bond yield curve, right, happening. And all of the FOMO that the new election has been causing, everything like this has been very, very good for the markets, right? But the reality is it's bringing us into a bubble, okay? And at some point this year, 2025, that's the whole goal I've been looking at here, guys, is we're going to see another massive move up. And that's going to include traditional markets as well. Another massive move up. And I think within the next 6 months or so, we're looking at a top and a complete crash back down, guys. That's the picture that's being projected to us. We're not going to be going into a multi-year forever bull cycle. It's about a year after that, halving. And then what happens when we are actually at the top? Well, you're seeing the weekly candles close below previous supports, and then the breakdown, guys. When you see things like that, you generally don't want to be in the markets. I'm a bit bearish here just because we're seeing a midterm breakdown, okay? Let's look at the NASDAQ once again. And we can see the NASDAQ closing below those lows as well. We did, however, balance off that level, which is all well and gravy. And let's look at S&P. No, let's look at a better S&P. S&P quite similar. Okay. Now, guys, I have another about 15 minutes or so. That's all I wanted to teach for today. So let's see if you guys got any questions and we can talk about it. We're going to be doing about a 15, 20-minute question every single day. I can teach you guys anything you want. It's completely open source here now, or sorry, open topic. We can talk about anything we just talked about today or something else. Let's get your questions here. Will we launch our own coin? No. Maven has nothing to do with crypto. We are not a crypto company. How significant were regulatory developments and mainstream adoption in Bitcoin's rise? Do I see these trends continuing to drive its value to all-time high? I'm honestly, I don't really understand the question. Like, you're just, how significant is mainstream adoption? It's the most significant. It's the only thing that matters. So I'm not exactly sure what the question is. Adoption is what causes price to go up. When evaluating Bitcoin as an inflation hedge, how do you compare it to other assets like gold? Well, I wouldn't use Bitcoin as an inflation hedge, personally. Gold is also not necessarily an inflation hedge. Bitcoin is a very risky asset. So if you were to use it for a hedge against inflation, you would be wanting to use a very small bet size on it. I would argue it makes a lot more sense to be investing in the S&P to hedge against inflation, right? Because that beats inflation only a little bit always, pretty much, right? With gold is more of a store of value, right? So that could be taken as a hedge against inflation because you will keep the value of your money. But it's more for when times are tough and risky and people don't know what to do. Right. Gold is more if you want to just make sure everything is okay and you're not sure what to do. Okay. That's my opinion on it. I don't really like gold at all. I think it's all felt well and great and kind of interesting to have some precious metals or whatever. I would prefer personally to be in the stock market because it makes a lot more sense, because you can, first of all, bet on companies that are actually doing well. So another note that you guys might want to look at is with Trump being elected, you want to start thinking about what sort of ideas does he have that he's going to implement, and then what sort of companies are going to be required for that. Okay. One of the massive ones that might be of interest to you guys is if he's doing deportation of illegal immigrants. How is he going to manage all of that data? How is he going to check people's citizenship, right, on a massive scale, right? So there's going to be data companies that are going to have to be involved, okay? There's going to need to be national security companies that are going to need to be involved, okay? Whatever brute force attempts that they need to evict people with, military or police force or whatever. These sort of things are to be in question, right? If open topic, I would like to learn about the CRT candle range theory. Never heard of it. I'm not sure what candle range theory is. As you said, interviewed many traders who are using fundamentals. What was their source? Source for fundamentals? You can use news events. Honestly, I use Forex Factory. Right? This is going to give you a good indication of what's going on in each government's economy or each country's economy, right? You can look at as these change, you can see shifts of things, right? So you can obviously see, well, what started happening in Canada, right, is 2024. I would say even we saw unemployment going up in probably start of 2023, right? Let's look at what that looked like, CAD USD, right? Well, look at that, right? So we were basically ranging. Start of 2023, we saw unemployment going up, which is not good for the economy, obviously, right? We could obviously see that it's confirmed probably right around 2024, right? We know for sure it's going up now. Oops. And then the start of 2024, that's when you probably wanted to get short, and look at that gain, right? So simple things like that you can find. You can also just follow global events and follow what generally, guys, it's pretty intuitive. If Trump says he's pro Bitcoin, Bitcoin's going to do well. The great thing about fundamental analysis is you don't have to think too much of it. You just have to do some research, and then there are some advanced strategies that you can start learning over time. Personally, I'm not there yet. I do the simple stuff, okay? And you only need the simple stuff because it's not that complicated for fundamentals. It's just boring and takes a long time. Can we talk about gold moves according to banks? I'm not sure what that means. What's the best plan to manage emotions during losses? Yeah, guys. So I like to journal a lot, like just in an actual workbook. I'm very much an advocate of journaling every day and processing the emotions and things that you're thinking throughout the day. I do this for everything from trading to relationships to, I don't know, my social time or whatever. Like all of these things, when I'm trying to develop some sort of new skill that it's very critical to process your emotions before and after. Okay. So how do you get to certain phases of your life, for example? So what are the steps required in, your question is a little bit vague, so I'm having trouble answering it. But the best plan to manage your emotions during losses is, well, you have to reflect on it in afterwards. So after you're experiencing these losses, you have to reflect on it in how were you acting during that day, right? You have to be honest with yourself, so much so, and it's really a battle of being honest with yourself and following what you're actually trying to do. If you're trying to make money and force yourself into trades, you're going to be losing generally. But in terms of an actionable plan, if you are experiencing losses, the best thing to do is just stop until you don't care anymore, right? Once you care about something, you're going to try too hard. And this is a weird kind of a weird thought process that I've experienced throughout my adult life is the more I care about something, the harder I try about it, and it makes me mess up. Okay. If I'm trying too hard, I mess up on it, and then I don't do very well. Okay. And that's again with everything, right? So if you can naturally just kind of let things go with the flow and experience them and try, but not care about the outcome for an individual day, that's generally better for you in the long term. ETH USD. Let's go to ETH here. So ETH's been doing this weird little range here where once it gets to 4,000, it just dumps, right? And it's doing it again. ETH fundamentally is not that good, right? I'm no longer an advocate of ETH. I think Bitcoin is the better option. People used to say ETH would move more than Bitcoin before, but I think it's Solana is taking over the trend now because Solana is a platform for the things that people are trying to use, which is meme coins, right? Ethereum is no longer a platform for things people are trying to use. It is a dying project. It's still going to do okay, but just like something like Litecoin, kind of slowly becoming obsolete, right? Litecoin was a huge second position for Bitcoin back about a decade ago, and it's been ticking down the ranks and performing worse and worse comparatively to the other projects. And I'm seeing a similar thing with Ethereum, where it is just not moving nearly as well. And when you're looking at Ethereum compared to Bitcoin, so let's look at Bitcoin ETH, right, or ETH Bitcoin. It's just down, right? There's no reason to be in Ethereum right now. Bitcoin is risky enough and it's performing significantly better. The only reason you're going to ever want to get into Ethereum is when this chart starts trending up, and it's not. You need to be above that level. Okay. Any giveaway on stream? So guys, how the giveaways are going to work is you need to take clips of either my TikToks or podcasts or interviews or these live streams. You need to take clips of them. You need to post them on your personal fan pages of Maven or my personal like a fan page for me. Post them in Discord, discord.gg/Maven. It's in the comments below there. There is a section for you to post your fan content. I'm going to be going through there, and we're going to be doing that on stream, and I'm going to be picking people that I actually want to give 50K accounts to, right? And I'm going to be doing multiple a week, and you're going to be able to gain knowledge, following. You're going to be able to gain giveaways. You're going to be able to even gain some affiliate links if you so choose to sign up for the affiliate link. So you guys are going to be gaining a lot by following along on these, and you want to be doing that every single day. Okay, guys, I think we're wrapping up here. I think that's a decent stream. Again, we're going to be doing this every single day going into the 2025. So make sure you tune in. A lot of things coming. There's going to be good education. Post in the Discord what sort of content you want to be seeing here, because I'm willing to learn anything and so that I can reteach you guys or teach you the things I already know, because I've been doing this for over a decade now, guys. So stay tuned. Lots coming in 2025. Thanks for tuning in. I'll see you guys tomorrow.